David, I wrote in my newsletter earlier this week about the analogy that Jensen Huang has been using, that the American technology stack should be akin to the US dollar as the world's reserve currency. That's how he would like the administration to approach it. Do you share that view and see some truth in that analogy?
Well, here's the way I see it, and this is really, I think, a Silicon Valley view, because I've been a founder and investor in Silicon Valley for 25 years. And what we see is that the winning technology companies are always the ones that create the biggest ecosystem. They have the most developers on their platform. They have the most apps in their app store. And so they work very, very hard to create a partner ecosystem. And I think that the United States needs to do something similar with the American technology stack. We want the most other countries using our technology because, again, it's a zero-sum game. And it's not just the chips, it's the operating system that runs on those chips. It's the AI models that then are run in these data centers. We want all of that to be American-made and American-powered. And, look, to be sure, there are security concerns and we can address them. I don't think that's that hard. But if we hobble our American companies and don't let them participate in the global market, again, we are playing into China's arms and playing into their digital Silk Road. So I think, to me, this is a pretty easy question. I think we do want American technology to be the global standard. It is a little bit like the dollar. There is a network effect there. The reason why everyone loves the dollar is because they know that everybody else will accept it as well. So we do want to have the strongest dollar. We want to be the reserve currency, and we do want our technology to be the global standard.
David, Bloomberg reported this morning that on July 23rd, the president's going to speak in an event titled Winning the AI Race, which you and the rest of the All In Pod team will be hosting, essentially. I guess that's going to be a moment where we'll have a fuller sense of what the president and this administration's big picture AI policy is going to be, what the big goals are going to be.
That's right. So the president will be giving a keynote address at that. It's a one-day AI conference in Washington, D.C. on July 23rd. It's co-hosted by All In and Hill and Valley Forum, which is also a D.C. and Silicon Valley policy group. And the president, I think, will be giving his first major address on the topic of artificial intelligence, building on the remarks that he's giving here in Pennsylvania today, which are also AI related and related to energy investment, the kinds of investments we have to make to power the next generation of AI.
David, you've been speaking there in Pittsburgh this morning. What's the main focus on the energy side of this AI story? Energy security is a national security priority, but just simply whether we will have enough energy resources to power the goals of Meta and the other hyperscalers.
Well, Pennsylvania is a huge energy producing state. I think it's our second biggest energy producing state. They have abundant natural gas, which I think in the near term is going to be the power source for these data centers. I think, in about 5 years, we could start seeing nuclear scale up, and the administration believes in that too. We want an all of the above approach. But Pennsylvania is very big in natural gas, and there are major investments being announced here for more fracking, for more grid infrastructure, for more power generation. All of those things are needed to power data centers. AI runs on GPUs that are incredibly power intensive, and these data centers of the future are going to need more power. And the one area, I think, where America is a little bit behind, I think we're winning the AI race pretty much at every level of the stack, except that the size of our power grid has not increased very much over the past decade. If you go over to China, they've roughly doubled the size of their electric grid over the past decade, where ours has only gone up by a couple of % a year. So this is an area where we need to make major new investments, and the president is coming to Pennsylvania today to announce many of those investments. And I think this has been a major priority of the administration, and I think you're going to see a lot more of this.
So I guess I would just say that the valuation is not as stretched as everyone would argue. I don't know that you buy it here. We were adding during the April tariff tantrum. We picked some off at $108 a share. We added to the position while we've been trimming Broadcom, which has actually outperformed NVIDIA over the last year. But if you look at fiscal year earnings growth, 2026 is supposed to be 45%, then 33% in 27, 14% in 28, and it's currently trading at a forward PE of 40. So you're actually paying less than 1 times on a price earnings to growth basis. So unless you think the growth in this company company is done. I don't think you sell the stock here. I don't think you necessarily buy more, but on dips, you step in and add to the holdings. I would also just point out AMD is actually up more because their M1 chip is going to get reinstated as well, and that's going to benefit the whole space. So the AI trade is what as an investor I'm focused on. I've been talking about productivity for the last 3 years, the analogies to the 90s, and the need to pivot to old economy companies that are invested in the new technologies, and then the providers of, or embracing the new technologies, and then the providers of the picks and shovels. So I think we still love it, and we continue to hold it. It's one of our largest holdings in our growth strategy.
That will be reassuring news, although maybe bittersweet for those who didn't jump in as the stock kept kind of making those.
How significant is this for NVIDIA? And I should mention, they haven't gotten the full go-ahead. They say they're going to they will get these licenses approved to sell these chips once again. So how much of a positive is this for NVIDIA?
Yes, hi Julie, thanks for having me. Yes, I mean, during a recent visit to Beijing, Jensen, confirmed that they had the plan to restart shipping the shipments of H20 to Chinese customers, and they don't have the full go-ahead, but they do have the assurance, that the export licenses will be granted again, and they are very optimistic. They expect deliveries to begin shortly. Just to put a bit of context, the H20 ban was a 2.5 billion headwind to revenues in the first quarter, and Nvidia expects another 8 billion in the second quarter. So that's more than 10 billion, that Nvidia didn't expect to recognize because of the ban, and that they now see as an opportunity again. And if you put even more context, like looking backwards, China has been historically as much as 20 to 25% of Nvidia's data center business. It came down, like with the H20 ban, it came down to zero, more recently, and now they do expect China to become an opportunity again. And we don't expect, China to become 20 to 25% again over the long run, because China is now working, on its own chips. Huawei is developing the Ascend, but we do expect, maybe levels similar to prior to the H20 ban, maybe in the 10 to 15% region.
Yeah, I was going to ask about that, sort of where they get back to. I mean, in addition to the H20, the company has also now developed another chip called the RTX Pro GPU that they say is compliant in the China market. Does that make up some portion of that revenue there? What role does that chip play?
I mean, it's just NVIDIA, innovating and, letting some of that innovation flow through to the Chinese market. China is not standing still. They're also innovating. They're bringing new chips to market. Of course, they're lagging behind NVIDIA. They don't have NVIDIA's ecosystem either to make the adoption of their chips as easy, as flawless as adopting an NVIDIA GPU. But they're still innovating, and so NVIDIA cannot stand still. They have to, respect the export license, but they can still bring a new generation to market. And clearly, the US administration's authorization, I mean, at least showing signs of authorizing to ship the chips again, is a sign that NVIDIA has an open conversation with them, and that they can keep innovating and remain somewhat competitive. At the end of the day, it's striking the right balance between not completely losing the opportunity and not allowing China to accelerate too much, its competitiveness in AI. So it's a very thin balance that they have to strike.
The focus is NVIDIA and AMD's ability to now sell in a limited way chips back into the Chinese market. Just your reaction generally to that?
Well, we still have a policy of not selling our state-of-the-art advanced semiconductors to China. And the H20 is not that. It's a heavily deprecated chip. And that's why the Biden administration allowed the sale of the H20 to China. And this is a continuation of that policy in the larger rubric of the trade negotiations that Secretary Besson was talking to you about. So this is a heavily deprecated chip. I think that, like Secretary Besson said, there are some things that China wants from us, or other things we want from China, and this was all part of the overall trade negotiation.
David, you advised the president on AI policy as well as crypto policy. Do you have any sense of when he met with Jensen Huang last week at the White House, what case Mr. Huang made to the president that it was the right thing to get the American technology stack back into China?
Well, Jensen's been making the case publicly for competing in China, and I think there are a lot of merits to the argument. If you look at developments over the past year, Huawei has advanced very rapidly. They have a new technology called Cloud Matrix, which networks together 384 of their Huawei Ascend chips. Now, the Huawei chip is not as good as the NVIDIA chip. The NVIDIA chip is 3 times more powerful, but if you network together enough of those chips, you can brute force your way to a similar kind of result. And that is what Huawei has been developing, is this Cloud Matrix 384. And there have been reports, including from Bloomberg, that they've started exporting that technology, or they've been seeking to export it. So Huawei is becoming much more competitive. And if you give the whole Chinese market to Huawei, it's a huge subsidy for their R&D, right? And it basically forces Chinese companies that might be willing to use the H20 to use the Huawei chip and to basically figure out the bugs, work out the kinks of the Cloud Matrix system, and help Huawei scale that up. So I think there is a compelling argument here that you just don't want to hand Huawei the entire Chinese market when NVIDIA is capable of competing for a big slice of it with a deprecated, less capable chip. Again, we're not selling our latest, greatest chips to China, but we can deprive Huawei of basically having this giant market share in China that they can then use to scale up and compete with us globally. So I think this policy is nuanced, and I think it makes a lot of sense.
The report you were referring to that Bloomberg had was that Huawei was going out to some of the Gulf nations and also some of the Southeast Asian nations and offering prior generations of their chip, but also the Cloud Matrix that you mentioned. The concern being that in dealing with third countries, that be some Chinese access to other nations' technology. How involved have you been, David, in these kinds of talks, in framing the president's thinking that actually just having direct access to lower performance compute is okay with China right now?
Well, look, I'm not going to discuss what I talked to the president about, but I can tell you what I think, which is that the Bloomberg story discussed how Huawei was basically trying to make available the Huawei Ascend chip, which is their current chip, which is basically put together in a rack system with Cloud Matrix to create a viable competitor to NVIDIA. And I think it is a viable competitor. I think NVIDIA and AMD and other American companies have a better product. But if we don't compete across the world, then we will hand the market to China. And one of the reasons that the president went to the Gulf states on that trip is to encourage business relations between the U.S. and the Gulf state. He signed massive investment deals. And one of the deals that we signed was this new AI acceleration partnership, where we want to create a pathway for the Gulf states like UAE to buy American technology, to buy American chips, and to create data centers on the American tech stack. And I can tell you that I don't quite understand why this has proven to be so controversial in Washington. But these nations, like the Gulf states, they have two choices. They can go with an American technology, or they can go with a Chinese technology. And if you don't let them buy the American technology, you're pushing them into the arms of China. And a lot of people said, well, China won't be ready to sell for years. But now we see that there are reports that Huawei is out there trying to sell and export the Huawei Ascend chip. So I think it's very important that we enable our American companies to compete in the global market, that we don't tie their hands, that we don't hobble them. Because, again, it's a zero-sum game. That market share will either belong to our companies like NVIDIA, or it's going to belong to Chinese companies like Huawei. There's a very simple test for this. Just look at market share. If 5 years from now we look across the world and we see that NVIDIA or other American companies have 80% market share, it means that we won the AI race. But if we look across the world in 5 years and see that Huawei has 80% market share, then it means that we lost the AI race. So I think it's very important that we do everything we can to encourage American exports. To be sure, we can name our security standards, but this is a very easy trust but verify situation. The chips that we're talking about are really mainframe computers. They're 8 feet tall, they're 3,600 pounds. It's very easy to send inspectors into data centers and count the server racks to make sure that they're where they're supposed to be. So the security concerns can be addressed. I understand that there are some security concerns, but I think they're very easily handled. And what we need to be doing is making sure that we win the AI race globally by making American technology the global standard and not letting not creating a Huawei Belt and Road.
NVIDIA shares are at a record again today. As we know, it broke that $4 trillion market cap. Is there anything that will stop NVIDIA from continuing to move higher?
I don't think there's like a hard stop around the corner, you know. I think, I mean, there are some very strong signals in terms of demand. You know, you hear Altman talk about its GPUs melting. You have already some hyperscalers who are giving strong signs around next year, growth continuing into next year. You know, the roadmap of hyperscalers of getting to millions of XPUs in their largest clusters, in their frontier clusters on a 2027 horizon. You have Broadcom guiding next year already. You have TSMC, you know, who's like putting out all the wafers to make these XPUs, who's guiding until the end of the decade, very strong growth, and that's, you know, consistent with the peak being like clearly still further away. So I mean, yeah, on all areas, I don't see anything stopping them down. Now, don't get me wrong, there might be like an investment cycle. We might, you know, take a bit of time to get to the next peak, but clearly the hyperscalers and the global economy is getting replatformed, and there is plenty of headroom for capex to increase further, for the capital intensity of the global economy to increase further, and that will fuel very strong investments in XPUs and NVIDIA in particular.
I mean, it's interesting, Antoine. At one point, we were having the discussion around NVIDIA, meaning the analyst community and folks who watch the stock, about whether we were going to see a trade down effect at some point, right? What were there other chips that could do inference rather than, you know, the view being that NVIDIA is best for training, although certainly Jensen Huang has made the argument that it's also good for inference, but that at some point we were going to see clients and customers maybe migrate to some cheaper chips. I haven't heard that discussion as much recently. Is that still a concern?
It's, you know, it's always there. You know, that concern is always there. It doesn't go away. But I don't know if you follow the news flow, you know, around Microsoft, for example, struggling in ramping its own ASIC, you know, and you know, Microsoft is working with Marvell, for example, that also impacted Marvell stock. I mean, we do expect, you know, ASICs, like custom silicon, developed by like a handful of hyperscalers, and say at the maximum you have 10 customers in the world who can have the scale to get there. We don't expect all of them to succeed. You know, it's very hard. It's very hard for so many reasons. You know, it's hard from like making a chip that's flexible, making a chip that can easily be used by your developers. You know, anyone can put out a chip. I mean, not anyone, but many people can put out a chip that's very, very good on paper, that has very, very good performance on paper. The key challenge is to be able to make a good use of that chip. And making good use of that chip, that's exactly NVIDIA's know-how. Being able to, you know, optimize workloads, being able to learn from all the experience that it has, its very large installed base, to ensure that all its customers can really fully utilize those chips, to shorten development cycles, to allow enterprises to quickly bring, you know, like new workloads to market. That has a lot of value. And that's where, you know, ASICs are going to struggle. Of course, you're going to have, you know, other companies. We know that Google is already there. For example, they have the TPU. They're at their fifth or sixth generation by now. They've been doing that for more than 10 years, and they still buy GPUs. So it's not going to like represent, in my view, like a material headwind to NVIDIA. Both are going to coexist.